This is part 3 of our 4-part series on using AI to investigate a real-life payments problem without handing the entire decision over to the model. We're analyzing a drop-in pay-through. If you haven't seen parts 1 and 2, go back and watch them first. They're both less than 2 minutes long. Okay, so in order to use AI successfully in this analysis, 3 questions have to be addressed. First, what information was lost when the data was rolled up? Second, what does the dashboard not know about the merchant's actual operation? And finally, can the AI-generated answer survive a serious challenge? Today, we're answering the second question. What does the dashboard not know about the merchant's actual operation? Even a detailed dashboard only shows part of the picture. It may show approvals, declines, suspected fraud, cancellations, refunds, chargebacks, but it does not automatically understand how the merchant actually makes money. It does not know the customer lifetime value, the cost of goods, the cost of each retry, the billing model, the fulfillment process, the customer communication strategy, the merchant's tolerance for risk, or the financial consequences of choosing one operating protocol over another. That matters because a recommendation can be correct in theory and still be wrong for the merchant. A longer retry strategy might recover more payments, but for one merchant, that may create more revenue. For another, it may increase processing costs, customer complaints, or chargebacks beyond the value of the recovered transactions. You see, best practices are only a starting point. Let me say that one more time. Best practices are only a starting point. They are not personalized operating instructions. Trust me, I would know. Payometry pioneered using personalized algorithms for merchants for well over a decade. Merchant-specific payment strategies built around the realities of each business. It is the work we are known for, and it remains the only solution of its kind in the industry to this day. Before asking AI to recommend a course of action, the payments team has to add the merchant-specific variables the model cannot infer from the dashboard, by you. Because AI can generate options, but it cannot decide which option is the best way forward for this particular business unless someone gives it the operating reality behind the numbers. The secret sauce in this step. The payments team has to connect the data to the merchant's actual economics, operations, customers, and risk profile. Without that, AI may give you a recommendation that is technically correct, but commercially wrong. I'm Scott Tivy. Follow us for more tips on using AI and payments responsibly, and reach out to Payometry if you have questions. In part 4, we'll look at the final question. Can the AI-generated answer survive a serious challenge? I'll see you back here tomorrow.